Hi and welcome to the market alert for Wednesday, 21st of September 2022. So US stocks declined on the eve of the FOMC amid inflationary and geopolitical concerns. And risk hit on heightened Russia-Ukraine tensions, German PPI and hawkish risk bank. Now the PPI was very interesting yesterday and I actually missed it. I wondered why the DAX was going down when it had gone up nicely to begin with. And the reason for this was this. Let me just go back one day. Shocking number. PPI for German month on month came out at 7.9. Was forecast at 2.5 and was 5.3 the month before. And this had a major impact on the market. And finally, awaiting the big man. Yes, so we're waiting for Powell this evening, 7 p.m. And we'll see what he's got to do when it comes to raising rates, whether it's going to be 75 basis points or the full 100. We'll see. And just a thought while I'm thinking about it, I will be missing in action tomorrow, so there's no market alert tomorrow, which is bad timing, I know, because we'll have had the reaction later tonight, but we can more or less predict what's going to be happening. It's probably going to be the 75 basis point hike. And if not, if it's 1%, then the markets will tank. If not, then it'll be seen as a relief rally. Economic news, well, we just mentioned it, haven't we? It's the FOMC. That's going to be the one the market's waiting for. All the rest, not really. This will be an interesting one, though. At 7 a.m, public sector net borrowing is, again, forecast to show 8 billion. Last month it was 11 billion, so it was it's 4 billion, so it must have been August then when it was, not August, where are we now? September, August, July. Must have been July when it was 11 billion. The months fly by. I know we had an 11 billion of borrowing one month. It must have been July. So really the main focus again is FOMC, and there's also a press conference with this one as well. And the next one will be December when they have the quarterly press conference in between. Or did Powell change this when he came in? It used to be quarterly. I think it's probably every month now when they've got a rate increase. So yeah, press conference at 7:30. So the market will have a bit of a volatile time between 7 and 7:30 p.m. And gold-silver ratio slightly on the decline for yesterday, 86.12, though still in that area. Again, it's going to react to today's activity. But let's have a look at yesterday's and see what happened, starting off with the Dow. Okay, yesterday we can see that the Dow moved sharply lower, then came off the lows to close back a third up, and also off the previous day's low. Let's have a look at this in more detail. You can see there, look at that, straight off the low yesterday, the low of Monday. The market loves to trade off these lows, particularly the stock market, because they want to keep the market moving up if they can, or stop it falling as much as they can. Nice divergence there as well as the market came off the low, and the demand as well. They were buying in at this level. And so far managing to hold the market as well, so we could see the market moving back up to the high prior to the Fed numbers coming out at 7 p.m. later today. In the German DAX, also coming off the lows, but we broke the low at 12,594, back up above that now, back above the 12,600 level, and looking as if it wants to move back and try and regain some of the ground that it lost during yesterday's session. There you can see that we also traded down to the low and just below it before the market found some demand after being oversold and trying to come back, and then sideways. The market currently at yesterday's close need to take this out of the 50 EMA and the DP in order to move to the upside, where it will find the 200 MA and the R1, and then you've got the high there. So long way back to yesterday's high with a lot of obstacles in the way as well. The big swing in this market would give you these fib levels as well, in between all of the averages, DPs, 200 MA, R1, and obviously the high will be above the 89% retracement level there. But yesterday it was a good move to the downside. It was, we started off well, and then all of a sudden the market digested the PPI numbers at 7%. It's a bearish thing at the moment. Would be bullish, although outside of a rate increasing environment. But the market then moving sharply to the downside, reacting to this in the 5-minute chart. You can see this. We kicked off in the cash market, moving to the upside. Then all of a sudden it was wallop, and then down she came. And then it quietened off through lunch, and then eventually, when I finished trading, around 3:30, 4 o'clock usual time, the market was sitting sideways. It wasn't making any progress at all. We did have a break to the S1, and then as the Dow got hammered down to the previous day's low, so did the German DAX, which you can see there happening around 6 p.m. Moved all the way back down. We saw again the demand coming into the market, retracement, and then moving back there. For yesterday's results, or for the week so far, we've got 43552. We've got a profit factor of 4.08, and we have 64 to 36 win-loss ratio there as well. And the total continues to move to the upside, 29,883, with a profit factor of still 2.38, and profitable trades, win to loss 55 to 45 there. So yeah, still making nice steady progress. Nice profits yesterday. A bit frustrating in the afternoon as the market traded sideways and gave back some of the profits. Is why you're seeing it sort of dip down a bit there, and also then remaining in a sideways range. In the S&P, similar to the Dow, trading down to the previous day's low, bouncing off this, and currently sat at the 78% retracement. In the 30-minute chart, you can see the exact same picture. We traded down, we came up, and then we had to go and retest the low. The market does like to test the low, though, just to see if anybody wants to buy off this area, and the pros will come in because they know it's a good deal. And there you can see the market sideways and stuck at the 50 EMA. It's got the DP, the 200 MA, the R1, and the high, just as we've seen with all of the other stock markets. The FTSE, big bar yesterday, a lot of price action, went up and then got slammed down, came off the low before the close, but through that 89% retracement there. So let me just grab this and draw this in, and you can see we traded down to the main swing in the market there to 89% yesterday. So from there to there, we've got that big swing to 89%, where the market's got a bit of support there at the moment. Say we moved up, the German PPI hammered the market to the downside, saw prices coming down, and then found support. Same picture as the Dow there, on that same pattern, and coming off the lows. Watch this low though, it's quite close. We're at the close at the moment. Again, usual averages and pivots that are in the way, and similar also with regards to the averages as well. As much as yesterday, the yen waiting for the Fed, still stuck at the 62% retracement, albeit we saw a trade to the downside in the yen. On the 30-minute, we got divergence in the market. Market moving back up again overnight. Not a lot to report really. Again, stuck at the 200 MA there, above the DP at the moment, and the average is sort of straightening out a bit, but definitely waiting for the Fed. The pound sideways as well. You see that there, protecting that 114 level as much as it can, because we know that 110 is lower than this, and tomorrow we've got Bailey out with his announcement and statement as well. But in the 30-minute pound yesterday, choppy one, we traded up to the 200 MA, back to the DP, back to the BRN, and just under the 200 MA before moving down back to the DP, and then back down, and then stuck in a sideways range at yesterday's close at the moment. But again, waiting for the Fed, because obviously the pound is inversely related to the dollar, and rates going up increases the value of the dollar, declines happen in any other currency that is opposite to this. And finally, yesterday, silver was moved to the downside, 62% retracement. This too coming off the low, starting to look fairly strongish actually, despite the fact that the dollar, if we just have a look at this, had a really good day yesterday. The silver market is holding quite well in the daily chart. In the 30-minute chart, you see the initial sell-off there, and we'll see the demand coming in here at 3 p.m. There, you got that cluster of volume. And then price is moving back to the upside. It needs to take out the 200 MA in the 30-minute chart. So it needs to take out the 1950, but at the moment the price is sideways and probably will remain so until the Fed announcement. Gold also sideways there. 1654 is that low that it seems to have put in place. It will be volatile when they do announce the rate increase later, though at 7 p.m. Be warned of that. Gold also finding some support yesterday at 3 p.m. as well, but the move off this not as good as that in the 30-minute silver market, which you see there, which is why you saw the gold-silver ratio moving down a bit, because silver was outperforming gold. And just going back to the dollar, depending on the news, we've got the 89 in the way at 110 and 110.445, which is the recent high after the decline there. Again, all eyes will be on the dollar and the bond market at 7 p.m. And crude oil stuck in a sideways range as the war with the Ukraine and Russia has started to come back onto the mainstream news. We'll have to wait and see what happens, but it's been in a range during the 12 days of mourning. Okay, that's it for this one. Let's see what happens with the FOMC. And just another quick reminder, I'll be missing tomorrow, back on Friday morning. So let's see what happens later today. As ever, thanks for watching. See you in the next one.